Welcome to Market Deep Dive. I'm Maya, and with me today is Tom, our senior market analyst. It's August 19th, 2025, and Bitcoin just hit some interesting technical levels while macro conditions are shifting rapidly.
Thanks, Maya. Today we're combining three key data sources to build a comprehensive Bitcoin strategy for the next 4 weeks. We'll look at social media sentiment from trading communities, fresh macro data from the Fed, and upcoming economic events that could move markets.
Perfect. Let's start with the mood on the street. What are traders actually saying right now?
The sentiment is fascinating right now, Maya. There's a clear exhaustion setting in among retail traders. I'm seeing posts like Bitcoin did a 10x, Ethereum did a 4x, XRP did a 10x. You could have thrown money into anything and made it. But here's the twist. People are actually frustrated, not celebrating.
That's counterintuitive. Why the frustration during such massive gains?
Two main reasons. First, many retail traders are experiencing what I call timing regret. They either sold too early or bought the wrong assets. Second, there's genuine anxiety about building wealth before it's too late. One trader wrote about losing passion for life after realizing they need to build wealth to avoid homelessness when their parents pass away.
That's quite heavy. What about the political side? Any economic policy discussions affecting sentiment?
Absolutely. There's significant discussion about AI disrupting traditional jobs. MIT just released a report suggesting 95% of generative AI applications are essentially useless, which is creating uncertainty in tech sectors. Plus, there's growing frustration about H-1B visa policies. 207,000 Indians received visas in 2024, while computer science graduates struggle to find jobs.
Interesting dynamics. Now let's dive into the hard data. How are the macro indicators looking for Bitcoin and risk assets generally?
The macro picture is actually quite supportive for Bitcoin, Maya. Let me walk through the key indicators. First, the US dollar index has weakened significantly, down 5.6% over 6 months. That's typically bullish for Bitcoin since it's priced in dollars.
What about interest rates? The Fed has been holding steady, right?
Exactly. The Fed funds rate has been stable at 4.33% for 6 months now. But here's what's really interesting. Real yields, which are inflation-adjusted returns on Treasury bonds, have actually fallen 6.3%. That makes Bitcoin more attractive as an alternative store of value.
And what about liquidity conditions? I know that's crucial for risk assets.
This is probably the most bullish signal, Maya. The Fed's reverse repo facility, which essentially drains liquidity from markets, has dropped a massive 47.8% in 6 months. We're talking about moving from $73 billion to just $38 billion. That's a lot of cash flowing back into markets.
That sounds very positive. Are there any warning signs in the data?
There are a few yellow flags. High-yield credit spreads, essentially the extra interest risky companies pay to borrow, have increased by 7.5%. That suggests some caution in credit markets. Also, the yield curve has been steepening, which can sometimes signal economic uncertainty ahead.
Let's talk about what's coming up. Any major economic events that could shake things up in the next few weeks?
Actually, we're entering a relatively quiet period, Maya. No Federal Reserve meetings scheduled, no major inflation reports, no employment data. The biggest items are some regional Fed surveys and advanced economic indicators at the end of August. This could actually be good for Bitcoin, fewer external shocks to worry about.
What about geopolitical risks? I know there have been some high-level meetings recently.
Good point. Trump recently met with Putin in Anchorage for peace negotiations regarding Ukraine. The market reaction has been muted so far, but any major developments there could impact risk sentiment. Overall, though, the geopolitical calendar looks manageable for the next 4 weeks.
All right, Tom, let's get practical. Based on everything we've discussed, how should traders position themselves for Bitcoin over the next 4 weeks?
I'm cautiously bullish, Maya. Bitcoin is currently around $116,000, and I see 3 main scenarios. The base case, which I give 45% probability, is a trading range between $114,000 and $119,000. The macro conditions support this sideways action.
What about the upside scenario?
The bull scenario gets 40% probability. If the dollar weakness continues and that reverse repo drain accelerates, we could see Bitcoin push toward $125,000 to $130,000. The key trigger would be a break above $118,000 with volume.
And the risk management? What should traders watch out for?
Keep position sizes small, maximum 2% of portfolio on long positions. Stop losses at 3% below entry for longs. The bear scenario, which I give 15% probability, would target $105,000 to $110,000 if we break below $114,000. Watch the VIX. If volatility spikes above 25, reduce exposure immediately.
Excellent analysis, Tom. So to summarize for our listeners, we have supportive macro conditions with dollar weakness and improving liquidity, but retail sentiment shows exhaustion. The next 4 weeks look relatively quiet on the economic calendar.
Exactly, Maya. The key levels to watch are 114,000 as support and 118,000 as resistance. If I had to pick one indicator to watch closely, it would be that reverse repo facility. If it drops below 20 billion, that could really accelerate the bullish scenario. Thanks for having me on the show.
Thanks everyone for tuning in to Market Deep Dive. We'll be back next week with fresh analysis. Until then, trade safely and keep those position sizes reasonable. See you next time.